day trading chart time frames, talking about different time frames and how to use the different charts when you're trading. So stay tuned. What's going on, guys? Patrick here. Today we're talking about something that seems very basic, but a couple people have asked about it, and it makes sense. I really haven't talked about it much, and I wanted to make this little video talking about day trading time frames and charts and how I use different time frames and the EMAs and how it all works, and kind of my theory on why I use the charts the way I do. So first off, let's just get the basics out of the way. There's different time frames, and when I'm talking about time frames, I'm talking about the different time frames, literally. So this is a 1 minute chart, and that makes sense. So every single candle on this chart is 1 minute. So you got, this candle right here represents 1 minute of price action. It went from 1868 to 1888 on that 1 minute candle. I know this is basic, but I want to break down the basics so everyone can understand. On the 1 minute chart, I'm using the 9 EMA, which is the exponential moving average, and I'm also using the 20 EMA. This really comes down to personal preference and then figuring out kind of what works best for you and all that fun stuff. When you really get into day trading, when you really start trading and figuring it out, it's going to come down to your personal preference. What charts you want to use, what software you want to use, what different indicators you want to use. All of that stuff is personal preference. Some people use different indicators and it works. It doesn't really matter what indicators you're using. Remember, these indicators are lagging. So no matter what indicators you have on the chart, it doesn't matter. In that moment, the indicator is telling you what happened in the past. It's not telling you the exact. So if you see, the indicator's pointing straight up, it doesn't mean that the stock's going to keep going straight up. It can turn off and go down. So don't get too caught up in indicators. Really just focus on price action, support, resistance, and the overall trend, and kind of reading the chart. So obviously, looking at the 1 minute chart, it's going to be all over the place because you have all these different candles. It's up, down, it's all around. This is Snapchat. It was all around today. Actually, it was kind of underneath the VWAP all day long. Couple of pullbacks. In general with the EMAs, it's not going to be as clear when you're reading the 1 minute chart when it comes to the EMAs and all that. The 1 minute chart will kind of give you a better idea of what's happening on that small time frame. So if you're really just trying to get in and out of a trade fast, if you want to see kind of like, hey, what's going on right at this second, you can look at the 1 minute chart. Now, if you want to look at kind of a bigger picture, there's people that trade on the 2 minute chart, people that trade on the 5 minute chart, there's people who trade on the 15 minute chart. It really depends on your personal preference. But for me, I use the 1 minute chart, I use the 5 minute chart, and then I use the daily chart really as my main focus. Also, I'll use like the hourly chart. It really depends on kind of what I'm looking for. If it's a swing in general, let's say I'm trying to get like a month-long swing going on, I'm gonna be looking at the bigger picture. So the bigger picture is gonna be, like the daily chart, the 1 hour chart. So let's say I want to look here at the 1 hour chart on Snapchat, kind of get a better idea of what's been going on recently. I can see here, okay, Snapchat recently made a big spike and got from that $14 area. I can also see that this $13 area was kind of like support. It's holding, really didn't dip below that $13 area for a long time. So I'm thinking, okay, there's good support there at $13. If I was looking to go long to swing this before, I would have been looking to go long at the 13-15 area. So right there, you can see already on the bigger time frames, it's easier to see the trends. Now, looking back at the 1 minute chart, I would never have seen that there was $13 support there because I just can't see it because it's so far back in time. And the 1 minute chart's very zoomed in. It's, you're like binoculars right on like that moment, what's happening right then and there. So the 1 minute chart is you're going to be trading, that kind of in and out really quickly. If you're trying to get a quick scalp, something like that, you're looking at the 1 minute chart. I really like the 5 minute chart because it's a little bit easier to see. For day trading, we're looking at that daily, what's going on inside of there. But I can also see kind of what went on yesterday. So yesterday I can be like, okay, I'm looking here at the resistance, support. I can see yesterday that this 1886 area was pretty good with support, on Snapchat. It bounced down there, 1886, had a little pullback there below that one. But overall, it kind of held that 1886 area. And even, at the end of the day, after hours, still didn't touch below there. So I'm thinking, okay, that's pretty good looking support. If that 1886 area might break, it might move lower. So I can see by looking at the 5 minute chart, the bigger kind of picture in terms of the last couple days, and then seeing like where that serious support, where that resistance is, and then kind of the overall trend. Obviously, looking at this right now, I can see that this overall trend is not going up right now by any means. So that's not looking good in terms of where this thing's going. Overall, it's trending lower. So I can see that by looking at the 5 minute chart. Now, going back to the 1 minute chart, I couldn't have seen that really. Looking at this On the 1 minute chart, it's basically just going across the screen. And if I'm only looking at the 1 minute chart, I wouldn't know that yesterday had that support or has that downward trend. Important to be looking at the overall picture, kind of seeing what the overall trend is on the stock. And then, I mean, really, if you look here at the daily chart on Snapchat, it's kind of the same thing. Like, okay, if I look back here, overall, this thing is heading lower. So there's a good chance that this thing is going to pull back at least, kind of back down where it started at, just to find some support, because it has this big gap up there. I can see the overall picture. Now I got a better idea. Like, okay, it's clear to see on this chart what's going on with the daily and kind of in general. So I'm using the 1 minute, I'm using the 5 minute chart, I'm using the daily chart, and it gives me an idea of what's going on with the overall picture. A lot of times when people trade, or I do the same thing, where I just only focus on the 1 minute chart, and then I don't realize that, hey, let's say for some reason I'm shorting this at the 1910 area because I just want to short it. And I didn't look at the 5 minute chart, and I'm looking, hey, this thing's going to crash. It's going down, down, down. But then if I look at the 5 minute chart, I might see, hey, yesterday, 1886 area bounced a couple times, so it might bounce again today. So if I'm going short here at the 1915 area, where would I look to take profit? Or where might this bounce at? And boom, look where it bounced. It bounced off the 1886 area. So it's very important to look at that overall picture. I get caught up sometimes in the moment. I'm trading some crazy stock, and I'm looking at it, and it's hot, 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 and I'm not paying attention, and all of a sudden, I look at the bigger picture, I'm like, holy crap, there's resistance coming up. Or, oh, I just bought right at resistance. What a bad idea. Why didn't I look at the bigger picture? So now when I'm trading, I actually have a 1 minute chart up top, I got a 5 minute chart down below, and I got a daily chart down there. On the daily chart, I've got the 50 EMA, I've got the 100 EMA, and the 200 EMA. On the 5 minute chart, I've got the 20 EMA, the 50 EMA. So depending on the different time frames, you're going to use different indicators because it's a bigger time frame and you need different indicators. Using a 9 minute EMA on a daily chart is just not going to do anything for you. You got to go to a bigger picture and then see. Also, if I'm looking here at the daily chart, I can see, okay, the 200 EMA here is at that $16 area. All right, that's pretty good. That's a good sign. If I'm looking for some support, where the support is, let's get another stock real quick. Let's look at NVIDIA. So I'm looking here at NVIDIA, and it's pretty clear here. I don't think you can see it. Let me pull up maybe up here. So if I look here at NVIDIA, I'm looking at the daily chart. I can see, okay, let's say I want to go long on NVIDIA, right? I'm trying to go long here. Where am I going to go long? Obviously, this looks beautiful trend-wise. It's got a great trend on it. It's pretty clear what's going on with NVIDIA. It's going higher, and you can see that pretty clear trend. Actually, a really tight channel. It pulled back here a little bit. But if I look at the daily chart, I can see where is that support, where is that resistance, and all that kind of fun stuff. And I can see, boom, there's the 50 EMA, there's the 100 EMA, and there's a 200 EMA on there. Again, I can see, okay, this pulled back the other day. It's pulling back. Where might I want to buy the dip at? Where is a good dip opportunity? Hey, look, there's a 200 EMA. Previously, back in December, it bounced off the 200 EMA. So if I'm looking here at NVIDIA, I'm thinking, okay, it's breaking the channel. Where might be the next support at? We got the 50, then we got the 100, and we got the 200. So the 50 breaks. Well, where's the next support? The next support is there at the 100. So now I'm looking to go long or looking for my dip buy at that 100 EMA area, which other traders are looking for support as well because they're looking at the EMAs, looking at all the different indicators, and most of the indicators are lining up kind of in the same spot. So it gives me a kind of idea, and I understand, that's cool. So looking back here at the 5 minute chart, if I'm looking at this, I really don't know what's going on with the bigger picture. I just see what's going on in that moment. And I don't really know where that support is, where that resistance is, and I'm just reading what's going on right in that moment. Obviously I can see there's some resistance, there's support, kind of what's moving on, but I'm not seeing what's in the past. I'm not seeing where that previous support was. So, okay, today we bounced off 217. We ended up at, if we had some support. Well, look at that. If I look back yesterday on the 5 minute chart, there it is. We bounced off 217 yesterday. So it's important to look at the big picture because now I know, hey, yesterday we bounced off 217. This might be a good dip buy. Maybe I buy here at 217. Look at it, up there to 234 now. So beautiful move here on NVIDIA, showing you how important it is to look at the different time frames. Don't get caught up on only one time frame. Look at multiple time frames. Confirm your thesis off of multiple time frames. If I look at the 1 minute chart and it looks like there's support there, okay, I look at the 5 minute. Let's look at the daily chart. Is there support there? Well, look at that. If I look back in November and December, there was clear resistance at that 217 area. And I look at yesterday, that bottom of that candle was 217. So now I can see where it's all lining up at. I get a better idea by looking at those different time frames. So by looking at the 5 minute, I see there's support. Looking at the 1 minute, I see it's bouncing. I see the daily, it's bouncing. I can look at all these different time frames and confirm my thesis. Back in January, again, it bounced off 217 multiple times looking at the hourly chart. So there it is. Very simple, very important to understand that you should be looking at these different time frames to confirm. If you want to short something, you're looking for resistance. Well, it looks like there's resistance on the 1 minute chart, but it doesn't look good on the rest of the charts. It's not that strong of resistance. Now, if I look at this on the 1 minute chart and it looks like there's resistance at the 234 area, like right now, let's say this, okay, maybe I want to short here at 234 area thinking this is going to pull back down there to that other support. Okay, 234, how are we looking on the 5 minute? Let's look at the 5 minute. Okay, 5 minutes not looking too bad. I can see there was some previous support there before, 234 area. Now let's look back. Okay, there was resistance there before. Okay, that's making sense now. Let me look back further. Okay, now if I look back here on the 60-minute chart, the stock got stuck there at the 234 area before. Again, so now I'm confirming where that resistance is. The more resistance I see, on the bigger time frames, if I look at the daily chart and I see some serious resistance there at the 234 area, that's going to confirm. Look at that. 3 days of resistance there at the 234 area. It makes a lot more sense. It makes me more confident in my position. It makes me more confident in my idea or my theory. So I'm looking for that confirmation across the bigger time frames and really just all the time frame. 1 minute, 5 minute, 1 hour, whatever you want to look at, figure out what works best for your strategy, and then look at the different time frames. Be looking at different charts when you're trading and getting a better idea of what's going on. So the more that resistance or that support lines up across all the time frames, the better chance that that's going to be a serious support or resistance or the overall trend. If I see on the 1 minute chart, we got a trend going, and I see the same trend on the 5 minute chart, and I see the same trend on the hourly chart, and then holy crap, I see the same trend on the daily chart. What's that mean? That's a pretty serious trend, guys. So there you go. It's very simple, very easy. Keep an eye on multiple time frames. Don't get stuck only looking at one time frame, but really look for multiple time frames for that confirmation of your thesis. So if I want to short something, let me see where that resistance is. If I want to go long, where's that support at? Boom. Makes sense, right? It really does make sense. It's almost too easy sometimes to talk about, but I think a lot of people forget this. I forget it. I forget to look sometimes. I'm on the 1 minute chart, and all of a sudden I look at the daily chart and I'm like, holy crap, why did I do that? That was a bad idea. There's resistance there. There's support there. So there it is. My take on multiple time frames, how it all works with day trading, and how you can improve your day trading really by looking at multiple time frames. Multiple time frames, multiple profit, all that fun stuff. If you guys haven't already, do me one big favor. I'm just asking for one favor. I don't ask for anything. I don't ask for much. I just ask for your subscription. I ask for a like, and then maybe a comment. Leave a comment. If you like the video, leave a comment. If you got a question, leave a comment. All that fun stuff. I'll talk to you guys later on.